with that, I will now introduce Laura Jones, our Executive Vice President and Chief Strategic Officer. Thank you, Laura.
Thank you, Alexa. Can you see me? I think I'm not sure my camera.
Yeah, we can now. Perfect.
Oops, I think I might have turned it off again. Okay, I'm a little slow. Looks like things are a little slow today. Welcome everyone. Thank you so much for joining us for our 35th webinar, 35th weekly COVID webinar. And for those of you who are new to these webinars, we've been running them for some time now. This is the opportunity that we have to share with you what we know is new and talk about the many questions we're getting through our helplines and try and get some clarity and answers to the questions you have. So we'll be doing that today. I'm Laura Jones, the Executive Vice President of CFIB. I'm joined by my wonderful colleagues, Corinne Pullman and Rachel. Rachel and Corinne, do you want to come up and wave to everyone and say hello? And so this is a team effort, these webinars. We put them on and work together to come up with the content and also to try and answer your questions. So you'll see us popping up in different parts of the presentation if you're new to these, and we'll again get to as many of your questions. So why don't we'll get right to it, but first I'll give Corinne and Rachel just a quick opportunity to introduce yourselves.
Oh, Rachel's too quick. So I'm Corinne Pullman. I'm the Senior Vice President of National Affairs and Partnerships. So I oversee all things to do with Ottawa. So I'm the one that gets to talk to all those lovely bureaucrats about the things that we like and don't like about the programs. So that's definitely, I also oversee our savings partnerships. So I will make a plug that if you have not had a chance to check them out, there may be some good opportunities there too for your business and help save some money at the same time.
And I'll try to be quick as well. So I'm a coordinator of special projects, and I work under Corinne, and am part of the National Affairs team. And one of my big responsibilities is overseeing all the federal escalations that come from BR counselors. And then we talk about a lot of those questions, and when possible, I try to take those questions to the bureaucrats that Corinne speaks to as well.
Thanks, Rachel. And BR, for those of you who may be wondering what's that, that's business resources. Those are our helpline folks that take your calls. So that's our internal lingo for that. So our commitment to you is that we know information is changing really fast, and that's true certainly of some of the more recent updates that we've had. So we're working to make sure that our website stays as up to date as possible, and we're working really hard to get clarifications on some of the issues that we're hearing from you. That, just to manage some expectations, isn't always easy, and it isn't always as fast as we'd like it to be. So Corinne, Rachel, and I, for example, were on a really detailed call earlier this week with CRA to try to get some answers, and it's clear that they are still a little bit unclear on a few things, and we'll try and be really as clear as we can about where that gray zone is, where we start to say, you know, we're really a lot less sure about this because we're not getting the clarity we need yet from Canada Revenue Agency or from other groups that we're working with. But that evolves over time, and then obviously as the programs, when they're brand new, there's more of that gray zone, and as they have been around for a little bit and people are applying, that gray zone starts to get clarified and more into black and white zones, which is helpful for people. So this is our commitment. Our helpline number is there. And then I always like to start the webinar with a few quotes. I had help from Corinne this week in finding some. She did an awesome job. I love the one about you can't change the direction of the wind, but you can adjust your sails to reach the destination. And I also like the bicycle one, to keep your balance, you have to keep moving. And Serena Williams rounds us out today by not being defined by our wins, but how we recover when we fall. So hopefully that gives you a little bit of inspiration to lean on in these what continue to be extremely challenging times. And I am going to warn everyone to take a deep breath for this webinar, because we violate every single principle about how many words you should have on a PowerPoint slide known to man. We had to do that this week because there's a lot of information we want to convey, and I'll remind people the slide deck is on the side, so take a breath and we'll try and walk you through this and in as clear a way as we can. All right. So on our next slide, we're going to get to what's new and an overview of the Canada Emergency Business Account expansion and clarifying the Canada Emergency Rent Subsidy are big topics that we're hearing a lot from you about. So we're going to spend some time on those. And again, there are some devils in those details. So take a little bit of a breath. And then we will try and answer your questions on anything. So you can type those into the questions box, and we will get back to as many of you as we can. On the next slide, one of the things, oh, sorry, Corinne, this is you. I'm confused. I thought we had the graphic next. So I'm going to turn this over to you first, and then I'll be back.
Great. Thanks, Laura. So what the biggest news that happened, of course, in the past week was the applications for the CEWS expansion opened last Friday. This is the $20,000 that you can get on top of the $40,000. Half of that $20,000 is forgivable if you're able to pay it back. I'm going to talk a bit more detail about the CEWS expansion, how it works, how you need to apply for it, and whatever else in just a moment. Excuse me. But also, in addition to that, on Monday, a self-service online option is going to be opened by EDC, which actually runs the CEWS program. And that online option will allow you to actually check the status of your application. So you can see if you've already applied, you can go in and check and see where it's at in terms of the application process, if it's been approved or not approved, if it hasn't been approved, or if it's in process. It will tell you that. If you haven't been approved, it will tell you why, apparently. So, if you end up using it and you've had some issues, we'd love to hear about that after it launches on Monday. In addition, I'll get back into more detail on CEWS in a second, but we did want to sort of update everybody as well on some of the restrictions that unfortunately continue to kind of happen right across the country. Some updates from this past week. Just yesterday, Alberta announced much more in-depth restrictions that are going to be imposed in many parts of the province, if not the whole province. They don't start till this weekend, but it will mean retail will be reduced to basically 15% of their normal capacity, but allowing them all to stay open to some degree. Unfortunately, restaurants are closed for indoor and in-person service. Personal services like hair salons are going to be closed down, and fitness and entertainment facilities are closed down too. So it's going to be a pretty rough time for many small businesses in Alberta in the coming months or the coming weeks. And I think this is in place for at least a month. PEI also moved to what they call a circuit breaker phase as of yesterday or the day before. This means their retail is also down, limited to 50% capacity. There's no in-room dining anymore in PEI. Personal services are open, but by appointment only, but they do close fitness and entertainment facilities. Manitoba's pretty strong restrictions continue into January. They did extend it. It was coming up for renewal, I think, this week. They've extended it now to January 8th. So unfortunately, it is going to go right through the holiday season. And we're hearing that the Ontario lockdowns, that's right now only Toronto and the Peel region, are going to be extended to more regions soon, likely some of the regions that are already in the red zone. So we don't know when or if it's actually going to happen. We're just hearing rumors that it may. So unfortunately, not a lot of good news to share for many small businesses in many parts of Canada. However, if we move to the next slide, there are a few announcements that were made. Oh, no, before I get into that, I don't know if this is the graphic, Laura, you wanted to speak to, but we did want to share with you. Nope, go back one, please. No, that one, thank you. So we did want to share with you something we've been putting out there to try to draw attention to the varying retail closures across Canada. We're using retail as a bit of a proxy because you could apply it to any other restaurants, other types of facilities that are being subject to many of these closures. Retail is a good caveat because there's the big box versus the small, and in some jurisdictions, especially in the lockdown areas of Ontario, it hasn't been managed very well in that they allow the big box stores to remain open while shutting down completely the small independent retailers. Here you can see by province how it is. Not too many restrictions in BC, but Alberta, as I just talked about, and you can go down the list of where there's some discrepancies between the retail when it comes to big box. Ontario really is the only one where big box is given a lot more latitude than small. Everywhere else, there's usually equal application of the rules, or in the case of Manitoba, in the case of Saskatchewan, they've only allowed big box stores to be open at 50% capacity, but allowing the smaller to be fully open if they have all their measures, security measures in place or safety measures in place. So if we move to the next slide, wanted to just tell you there were a couple of new programs launched as a result of these closures. So business, the provinces are trying to see if there's other ways they can help those businesses. In Alberta, as they announced the closures that are coming into effect this weekend, they also announced an expansion of their SME relaunch grant, which basically allows you to get up to a maximum of $15,000, which was 3 times the original amount, which was only $5,000. So that has been expanded. If you've never accessed it before, this grant, you can actually get up to $20,000 because you would probably miss the first original $5,000 grant. And they've changed the threshold amount. It used to be you had to have at least a 40% revenue loss to get it. They've reduced that now to a 30% revenue loss. There's a link there for those in Alberta who, if they are interested in learning more. Saskatchewan also announced a new program called the Strong Recovery Adaptation Rebate. And this is really to help businesses who adapted their business models to address some of these issues on COVID-19. It could be going online and getting digital. It could be having to purchase plexiglass and other changes to your actual physical space to accommodate. And this is something that you have to have at least less than 100 people working in your business. Your expenses can go back as far back as April up until the end of February, and you have to have at least a 30% revenue decline. That in doing so, you can get basically a rebate of up to $5,000 for any money that you spent on some of those changes. And it's not yet available, but should be launched in the coming weeks. But there was a reminder, our Saskatchewan colleagues told us that there is another program called the Saskatchewan Small Business Emergency Payment Program. That opened December 7th, so a couple days ago, and you have to get your application by the end of January in order to access that one. And there's links there for those in Saskatchewan. Next slide, please. Manitoba also expanded their bridge grant at the same time as they extended their closures also. What they did is they expanded it to include home-based businesses now. These businesses have to be working full-time, and they can get a grant of up to 10% of their most recent calendar year revenue, up to $5,000. So there is an application link there if that's something that applies to you, and you have to apply for those by December 31st. I also wanted to just quickly mention that over the course of the last few weeks, we've heard from many worker compensation boards across the country. Of course, many of you who have employees have to pay premiums to those worker compensation boards. 9 out of 10 provinces have actually frozen or decreased those rates for 2021. So that's good news, and that you shouldn't be seeing an increase there. The only province we have not heard anything from is Prince Edward Island. So all the rest have either decreased or frozen their rates. Government, you may recall, also agreed to freeze EI rates this coming January, so there will be no increase in the EI rates come January. However, we do have some bad news in that Canada's pension plan, or the CPP premiums, which are on a 5-year trajectory of going up, will continue to go up as of January. We have been pushing very hard over the last several weeks, talking to provincial governments, talking to the federal government, trying to find a way to get this particular CPP increase deferred. Or find some kind of offset for it. We're still pushing for that, but the window is closing. We've had mostly feedback from the federal government saying that they're just not going to go there. But we do have some provinces still working with us, trying to push the federal government on this. So we're hopeful we can get something, potentially maybe an offset to that increase, but it looks like the CPP increases are going to be moving forward on January 1st. All right, we'll move to the next slide. Now I want to get a bit of a deeper dive into the Canada Emergency Business Account. So that particular CEBA, as we like to call it, is an interest-free loan of up to $60,000 now. $40,000 was the first tranche that was first introduced back in the spring, and they just announced the extra $20,000. And you get 1/3 of that $60,000, or $20,000, could be forgivable if you repay the entire loan back by the end of 2022. I want to just reiterate there are 4 versions of the CEBA loan. The first one is the payroll stream. And that's the one where you have to have payroll between 20,000 and 1.5 million to apply. The second is a non-deferrable expense stream. That is for those people who are not eligible under the payroll stream. This is another option for them, but they have to show that they have non-deferrable expenses of more than $40,000 per year. It's also fairly complicated and not the easiest to get through, but as a second option. Third are those people who may have a personal bank account. They can now access CEWS as well. They will have to open a business bank account in order to access it, but then once they've done that, they can apply for CEWS either through the payroll stream or through the non-deferrable expense stream, whichever applies to their business. And then finally, what we want to talk about today is a CEWS expansion. It provides the additional $20,000, half of which is forgivable for those who already received the CEWS. So let's dive into that in a bit more detail. So on the next slide. Oh, I'm going to bring my colleague Rachel up to talk a little bit about the application process. So I'll turn it over to you, Rachel, for this slide.
Thanks, Corinne. And a lot of members calling our BR counselors are having some questions about the way that the CEWS or the CEWS expansion works. So we thought we should put together this slide here to kind of show you the differences between if you have no CEWS currently or how you can apply, and if you do have a CEWS already and how you apply for the expansion. So if you don't have a CEWS yet, there are, and I'm going to try not to go through all the details here because there is a lot here, but generally you want to go through the pre-screen questionnaire. You want to make sure your bank is offering the 60K right now, if that's what you are looking for. If you want the 40K, then feel free to apply there. That your financial institution might be joining for the expansion later. But yeah, a lot of this will change the way that your agreement looks like. And the main point of this slide is to show you that as of now, you can apply for up to 60K of a CEWS loan. And then if you already have the 40K, then you can apply for the expansion to add $20,000 to your current CEWS loan.
Yeah, so the fact is so if you already have a CEWS loan, you're going to automatically be eligible for the expansion. So all you're really going to have to do is go to your bank, basically tell them that you want to apply. Well, you don't have to go to your bank, just go online because it's all online, and just apply for the extra $20,000, and it should be automatically. You have to sign an attestation, which is a fairly lengthy attestation, we'll have to admittedly say, and that attestation includes things like, yes, I have been negatively affected by COVID-19, lots of stuff around, you have to agree to let the government of Canada get your information because it's the bank that's providing the attestation. So there's a lot of stuff like that in there, but once you say yes to that attestation, it's a fairly straightforward process. So that's if you already have it, which most of you are going to be in that category. And if you don't have any CEWS, you can go straight to the $60,000. You don't have to apply for 40 and then another 20. You just can apply for the 60 if your bank. And our understanding is by the end of this week, pretty much every financial institution will be offering this particular $60,000 option if you've never actually applied for CEWS before. So that's our
That was my question, Corinne, is because it sounded like some of the financial institutions weren't there yet. Which of the main ones would we still be waiting for? Do you know?
No, there's no main ones left. All the big ones should be now offering it. These are the smaller credit unions that may be more rarely regional in scope. That may take till the end of the week, but Rachel and I had a chat yesterday with our friends at Export Development Canada who are running this thing, and they seem to feel pretty confident that pretty much, I think it's 180 or so different financial institutions across Canada should be on board by the end of this week if they've chosen to actually accept it. There may be the odd small one that for whatever reason isn't going to do it. But yes, so they should be on board right across the country now.
Great.
Great. All right. So we'll move to the next slide. So as we said, this is now open for applications. We've gone through most of these details already. So again, just to reiterate, if you've already qualified and received your CEWS loan, you'll automatically be able to apply for this one. You still have to go through the application though, but you will be automatically made eligible. Again, you'll have to test to a number of things, but that doesn't really, go through it. There is one line, for example, that sort of talks about you cannot, you're doing this, you're not doing anything fraudulently, and if it's found that you have, you could face very serious consequences, including up to 14 years in prison, which seems a bit extreme to include in an attestation, but it seems that that was their intent, was to make sure that they're sort of scaring people into making sure that they're being honest. Our best advice to all of you is to continue to make sure that you're documenting everything you do and why you're doing it. So should there be some sort of audit in the future, you can say, well, this is my reasons why I felt that this could be included in this particular application form. So yeah, I think we've covered pretty much everything on this particular slide. And so let's go to the next slide just to see if that's it. Nope. Final details I wanted to just mention on CEBA are the deadline to apply for all of these different CEBA versions is going to be March 31st. That was also extended from December 31st to March 31st. So you have some time. You don't need to be worried about it. I also wanted to mention that you may want to think about if you have to remember that the forgivable portion of CEBA is actually taxable. So, and it's taxable in the year you receive it, right? So the fact is that if you received your CEBA loan this year and the extra $20,000 this year, you're going to have to add $20,000 to your income for this year and get taxed on it. If you're okay waiting maybe 2 or 3 weeks and applying maybe later in the month or January, and then you only get the actual forgivable amount in January, then that extra 10 grand doesn't have to apply to your income for this year. It can apply to your income for next year. So that's one of the small little tips that we actually got from accountants who said, look, if there's a way that businesses are able to wait, then they might be to your benefit and that you don't have to pay as much tax right away on it at least. So that's one of the weird anomalies of the CEBA system right now is you do have to pay it now, unfortunately, the tax on it now, even though you don't really get it theoretically until you pay back the loan in a year or two. Finally, I wanted to mention that people who receive the Regional Relief and Recovery Fund instead of the CEBA, they will also become eligible for an extra $20,000. However, details on that are not yet available. However, the government did commit extra money to those particular regional development agencies to provide that extra $20,000 to those that actually got it through the Regional Relief and Recovery Fund. So more to come on that one. I think that's it for me, Laura. So I think it's already.
Before you go, just before you go, and before we do a really fun dive on the rent section, do you want to mention there were some other announcements in the fiscal update that are things that aren't quite ready to go yet? Do you want to just we didn't include a whole lot of that in the presentation because they are still at it's almost like there's the announcement stage and then there's a little more details on the announcement and then there's the application phase, and we're still sort of at the very early stages with some of this, but do you want to just mention them?
Yeah, I mean, we talked about them last week a little bit, but certainly things like one they're calling affectionately the HASCAP, which is the Highly Affected Sectors Credit Availability Program, which will provide loans that'll be 100% guaranteed up to $1 million for businesses in, say, tourism and hospitality and arts and recreation that may really need some extra cash. So that's not yet available. We're hoping it'll be available soon because we know that times are getting more and more difficult. They should. So that's probably the biggest one that came out of that last week. Of course, there's also increases, both the rent subsidy and the wage subsidy been extended until June. We've also been told what the actual rates are going to be up until March. And for the wage subsidy, they're actually increasing the top amount to 75%. So that one too should be coming. I've already had questions. I noticed that people asking how the comparison is going to work. Do you still compare it to January, February 2020, or is that going to change? How's it going to work? So we're going to have to, those details we don't have yet. And I know it's starting in like a week and a half or 2 weeks. So we'll try and get those details for next week's webinar.
Thanks, Corinne. Still lots we're working on too, especially for new businesses. So that's another category that where there's
That's true.
Nothing yet, but we're sensing a little more openness in Ottawa to that. We don't have anything yet, but I think a little more openness would be fair to say, yes.
Yeah, it definitely feeling that there may be something coming for newer businesses. Yes.
Okay, great, thank you. All right, I'm going to ask Rachel to join me for some CEWS fun, the Canada Emergency Rent Subsidy. So I think most people are aware now of the overall details. Of course, feel free to ask us questions on the basics if you're still just coming up to speed on some of that. But this slide gives you a bit of an overview. I mean, one of the big differences between the Canada Emergency Rent Subsidy and the old CRA program is that tenants can go directly to get the relief without having a landlord sign off. The second big difference is that any revenue loss qualifies. So that is good news and different from the other program. So those are the big things. Up to $75,000 of rent is eligible for the relief, and but up to a maximum of $300,000 if you have multiple locations. So those are sort of the really high level kind of parameters around the program. And then of course, applications are now open. And once the application opened a couple of weeks ago, we got a tsunami of questions on as people are trying to figure out the details. The devil is definitely in the details with these programs, but the applications, and we're going to get into that in a minute. That's the fun part. They are open for the first period and for the second period, and I think we expect sometime kind of mid-December, sometime after the 20th, Rachel, that they'll be open for the third period, if I'm not mistaken. Now, we had understood that payments were starting to be made as of December 4th. We haven't heard yet from any members who have received their rent subsidy payments. So if you have received one, we would love to hear from you that yes, it came through, because we always like to know what is happening with respect to the payments actually being made. And a few more details here. The rent subsidy is going to go up to 65%. And then there's a top up that could take you up to 90%. Obviously, some devils in those details as well. The bigger your revenue loss, the more you qualify for the base amount, up to that 65%. One of the things CFIB is currently asking for in its lobbying letter is that because the wage subsidy was increased to 75%, we are asking that the rent subsidy match that at 75%. So we do have a policy letter into government. I'm going to refer to that maybe a couple of times in the next few minutes, because we're noting there are a number of challenges and issues with the program. So we are raising that we just sent a letter to Minister Freeland about the challenges we're seeing and our recommendations. So for example, things like those of you who were shut out of CRA, there not being any retroactive relief to cover those months. That's covered in our policy letter. New business is covered in our policy letter. We've heard from a number of businesses in the tourism sector that January, February revenue comparison can be very problematic if you're a newer business. So we're raising issues like that in our policy letter, as well as the mother load issue, which is the holdco OPCO issue, and we're going to do our best to tell you what we know, but I'm warning you right now, there's also, even after some fairly lengthy back and forth with CRA, some things that we are looking for clarification on. And I guess my other sort of maybe fine print caveat here is Rachel and I are not accountants, and we are not tax lawyers. So we're going to try and be really clear with you where the limit of our kind of understanding is and what we're still trying to get clarity on. And I think that's really important, that some of our best advice may be that you need to talk to your accountant on this one. So we'll try and at least give you an overview, and hopefully that will help. On the next slide, here we go, Rachel, are we ready?
I hope so.
This is the most fun question we're getting, is the OPCO holdco structure. And a couple of weeks ago, some of you will remember, we had CRA on to do a webinar. And one of the things they basically indicated is, look, if you're in this structure, you're kind of not, don't worry about it, you're not eligible, which then led to a flood of questions, as well as some of our accountant members reaching out saying, actually, there may be a path. So that's what we want to talk about now. The question we're trying to answer is, if you are in the OPCO holdco structure, are you eligible for CEWS? And I just want it to be really clear with everyone that this is probably, there's still some unclarity. We're going to try and answer the best we can right now, but this one is one where there's still some uncertainty. So Rachel, I'll turn it over to you to try and summarize what we heard from CRA. And this is a question, we've actually put this question back to them, this very slide, to say, please flag for us if there's anything that we have wrong here, but we have not yet heard back. So I just want to give that caveat. Go ahead, Rachel.
Sounds good. And maybe if there is anything, we will definitely be bringing that back onto the webinar as well, just so you know. But the answer, from what we understand from CRA and from the many accountants that have been calling us, is that possibly there's a path here, but it's complicated. There are elections, just like the CEWS elections, there are CERS elections that allow for a holdco to apply for the CERS. And note I said holdco and not OPCO. And under these elections, the holdco and OPCO revenues can be consolidated. And some things for you guys to note is that if you do decide to go forwards with this election, your CERS and your CEWS revenue calculations, aka elections, they should be consistent. And so they should look the same for the same periods that are respective to the CEWS and the CERS. The next thing that we want to remind you is that rent will still not be eligible. That is not at arm's length. But other arm's length expenses for the holdco may still be eligible. So things like property taxes, mortgages, and property insurance, those things would still be eligible expenses in that situation. And another note is, if your holdco was not impacted by a mandated closure, it won't be eligible actually for the top-up subsidy, because it won't have any restrictions on that company. And so yeah.
Yeah, so the pathway that we're seeing that may exist here is this election where you're consolidating your revenue for your holdco, OPCO, but then it's the holdco that essentially is applying for the relief, which means that it is those holdco expenses that then are eligible, like the property taxes, mortgage, and insurance. So I think it's a really important point, Rachel, around the CERS and the CEWS revenue calculations need to be consistent. And this is why it's hard for us to, this is why businesses are going to have all kinds of different scenarios here. And this is why you may really want to talk to your accountant, because this has to be consistent. And there may be different elections that give you different outcomes. There may be one that's better for the CEWS and one that's better for the CERS, but you need to pick a lane. You can't use the different elections for the different programs.
Yeah, so a few things that we want you to know for if you're in this situation is, make sure you're checking the list of elections to see if any of those might apply to you, and then have that conversation with your accountant. If they're not aware of these elections, you can show them to them, and we've actually included a hyperlink there to the CERS attestation where you can find those elections. And if either of you have any questions about this, you can also call the Business Inquiries CRA line. I know people have mixed feelings about this. You can also send us your questions as well. But ultimately, the CRA Business Inquiries line is often who also provides us with some of our information. So yeah, there's a few things that you can do if you don't have an answer here.
And the language around the elections can be somewhat intimidating, which is why one good option might be to talk to your accountant. But the other thing that Rachel has helpfully done is put together a list, and in the appendix you'll find a list of the elections with some plain language that we've tried to put together. My only caveat on that, again, is It's there for you, but we are still validating that our plain language works with CRA. We didn't want to not include it in today's webinar, but I just want you to put a little star around that CFIB is still validating with CRA, and some of the discussions we're having with CRA are really interesting because it's clear they are still working out some of these rules. So they're not able to be as clear with us as we would like, but that will change. And Corinne, I know you and Rachel had a lot of experience with this, a lot of fun with this in the CEWS program when you were drilling down into those details, and so you might want to speak to that.
Yeah, so that's what I was coming up to say, that, we had a lot of experience when trying to work through the wage subsidy. And when that program came out, I would say it took at least 6 to 8 weeks before we got and we probably still don't have full clarity on everything, to be honest, but until we got comfortable that we were getting the answers that were clear. Because what we discovered, and what I think you're discovering as well, Laura, is that CRA is not completely clear at this point. They're still trying to figure out what exactly they're going to allow and not allow based on their interpretation of the rules that were just created basically 4 weeks ago. So that's a bit of the challenge we face. So it's the whole dilemma of, do you wait till it's perfect, or do you put it out so that people can use it and then evolve it and figure it out as it goes? So unfortunately, we'd love to be much clearer on these things. Plus, it allows us to push for changes, which all three of us have been involved with in the last several weeks, is to get CRA to get more clarity, and also potentially to make the changes that need to be made in order to make these particular programs more accessible. So please bear with us and bear with the government a little bit. And we wish we could be clearer, but that's just the reality we live in today.
I would also add just to bear with your accountants as well, because
same for them.
Yeah, the Act for income tax has not changed this much so quickly in such a short amount of time. So we're all trying to just muddle through this together.
Yeah, that's a really good point, Rachel. And Corinne, your point about us asking for changes is also a good point. And I want everyone to know that this is our #1 recommendation for the finance minister, is take a simpler approach to dealing with these non-arm's length revenues. And our recommendation is just to let if there's a like with SECRA, if there's something documented and you're paying market rent and all of that, that there be just a simple path for the OPCO to apply, rather than this election that has to be made through the HoldCo. So again, if you have any thoughts on that, please let us know. But that is our recommendation that we have into finance right now. We're very aware that this is a big challenge that is out there for many businesses, because many of you structure your operations this way for good reason. And CRA is aware of that too. But the last thing I'd say is CRA is not great at plain language, so that's another big challenge we have, that we're trying to translate what they're saying and then put the plain language in front of them and say, does this pass the muster? And that is that's a whole new level of fun. Okay, so let's move on to the next CERS question. So the next slide. We also had a lot of fun with this one, Rachel. What is a net lease? Because this is the term that CRA is using. And so I will turn it over to you to help our audience understand what's clear and what's not, and what's a net lease.
Yeah, and this is something we're also touching base with a couple, I'll call them property lawyers, to see what they say about this as well. So if this changes in the future, that'll be another reason why as well. But from what we hear from CRA and from what they've been putting out on their business inquiries lines and their senior agents, is that a net lease is a written rental agreement between the landlord and the tenant that states the tenant will pay one or more expenses, and this can be like rent and property taxes. So pay one or more of these to the landlord. And so this can be owed or payable. Keep in mind that 60-day window for when you have to pay that expense. And So a lot of members have asked me, oh, why does it say a third party, it can be paid to a third party? And really what has been explained to us is that it can also include the landlord's agent or the property management company that actually takes those funds and those expenses and provides them to the landlord as well. So a little bit of, hopefully that's clearer than mud. Laura, let me know what you think of that.
Well, no, I think again, we have this slide, Rachel, into CRA. You haven't heard back from them yet. This was our attempt to make it as clear as we think, and this is what we think it is. I would say we're reasonably confident that this is, but it doesn't have the CRA stamp yet. But the reason we wanted to define net lease really comes into our other question, because we're getting a lot of questions about are there regular payments like, internet or phone, what other expenses? There's your base rent, that clearly is in as an eligible expense, except if you're in the holdco opco situation that we just talked about. But if you're not in that situation, that's clearly in. The base rent is in. If you're just a straight, if you're a tenant that pays rent. But what we're getting is lots of question about, well, what else might be included? And so, Rachel, this is our attempt at answering that next question. But again, I'm putting a little bit of a caveat that we're getting into some gray zone here where there's a chance that some of this may get clarified further.
Yeah, and so this question is we're hearing is around phone expenses or internet expenses to third parties that are not directly to landlords, and the answer that CRA has provided and all the other CRA lines of communication have been that no, it's not likely that these expenses will be eligible if you pay them independently of your rent. So in some cases, rent might include other expenses, in which case they are covered. So actually, really, what you need to look at is whether you're within the rent. These things are already included or not. So that is the answer to that question. So phone and internet, so far, we're hearing no.
Okay, great. So unless it's just part of you don't pay, the landlord pays them and it's part of your rent. So if we go to the next slide, this is, again, our attempt at putting together the eligible and ineligible expenses. And so, Rachel, you might want to pull up a couple of highlights here, and also we're kind of checking on a few things to really drill down to some additional clarity with CRA that we are flagging.
Yeah, and you'll notice that what we've written as eligible is if they are included under a net lease. So it kind of goes back to that question before, is it included in your rent if you're a renter? And that's why we've been hearing a lot of questions about utilities. So we've highlighted that because there's a bit of back and forth, is hydro included or not? If you don't pay hydro directly to your landlord for rent, then it wouldn't be included. And just to be aware that a lot of these expenses, the eligible ones, are property expenses. They're not business related. Well, they are business, but they're not operating expenses necessarily. They're more geared to property expenses. And this is kind of the lines that CRA has been trying to communicate from what we're hearing. So yeah.
There's still, I would say there's still a bit of murkiness here. There's still a bit of muddiness and a bit of clarifying that we have to do. But, for example, on the utility one, what we think is that if you're paying your utility bill directly to the utility itself, even if it's mentioned in your lease that it's an obligation that you have to pay it, that we don't think that's included, but that's what we're trying to validate with CRA. So that's not an answer to take to the bank yet. And, I hate doing that because what we're really trying to do is get you as much clarity as possible. But in some cases, I think that means giving you clarity about where there's still a lack of clarity. So the next slide gets into the question, okay, what do I do then? I want to apply, and there's still these questions I have. I don't know whether, whether some of these expenses can be included in CERS or not. What's your best advice, CFIB? So here it is. Here's our best advice, which is basically to use your best judgment about what you can claim for. And we know base rent is covered, so I would be conservative and include that. And if there's anything that you have question marks around, I would leave that out for now and then plan to amend your application. And those amendments aren't available now, but they should be available soon. We've mentioned on, I think, every single webinar we've done, we've mentioned, I know some of you are so sick of hearing me say this, about that business journal, but this is the perfect thing to keep track of in a little journal where you're saying, okay, I applied for CERS. I didn't know whether my snow removal expenses were eligible, so I didn't include them, but reminder, I'd like to check in case I need to amend this. This is something I want to come back to. But many of you need the money now, and so you don't necessarily want to wait until you have every detail perfect, but I would be conservative because it's a little bit easier to ask for more than it is to have to repay if you've made something that is, if you've claimed something that's not eligible. And Rachel, why don't you add to that and talk about what happens when you make mistakes on these applications?
Yeah, so really, the CRA has actually been clear about whether, so after you send your application, they will potentially be calling your landlord or some of your some third parties about whether those payments are actually accurate or not. So you might get one of those calls, and it won't necessarily, they don't like to call them, they're not audits. So I'm just trying to be clear about that. It's just like a validation call. But if we're talking about if you do want to make an amendment, or if you do want to correct a mistake, keep in mind CRA isn't really looking to create more work for themselves. They're not looking to penalize people that have made simple mistakes. So it kind of goes back to Laura's recommendation to have a business journal to say why, write down why you did like the things that you did, and really give us a call if there is something that's incredibly alarming, because we'll definitely raise it with them as well.
But just be prepared as you're working through this. And again, this is our best advice about when you don't know what expenses can be claimed for CERS. If you're in that OPCO holdco situation, I think our best advice is to be careful and to check, about the elections that you choose to make, and to check with an accountant and make sure your CERS and CEWS are, in the same, that you're comfortable with the elections for match up for both. So for both of those things, I think that one of the step one is to make sure that you've got a good handle on the best, most patient version of yourself as you go into figuring this out, because the lack of clarity can make you want to pull your hair out, and we're totally sympathetic with that. I'm trying to give you our best advice on how to get through that, but unfortunately, especially on the OPCO holdco issue, there may be a little bit more investigating that you have to do. Okay, let's go to the next slide, Rachel, because I want to make sure we're leaving some questions. So I'm not going to run through this in detail, other than to say, here's the CRA helpline. If you get stuck, that may be of some assistance. We're always here to try and help you. This one is a challenging one, though. As I said, we're not accountants, so it starts to get into push the limits of some of what we're able to help with. For both of those calls, having your relevant information right there is obviously a best tip. And then there's some website information that CRA is putting together, and they're looking at updating this constantly too. They're not like, okay, well, we're done with that. They're very aware that there are a lot of questions in this area and they need to update it. And then you might want to watch it wasn't last week, actually, it was 2 weeks ago, but the webinar with CRA for some reference. However, if you're in the OPCO holdco situation, that webinar the CRA did not get into that level of detail and did not talk about the elections, and in fact confused people a little bit, I think, because we came away thinking there was no path based on what they were saying, and it looks like there may be this path to consolidate revenue. And final bit of advice here is just take a deep breath and breathe, because breathing helps avoid panic and frustration. Okay, and with that, I think we are almost at the end. Here's that important tip. Again, even if you haven't started one yet, just start one, date it. I'm struggling with my CEWS application. Here's why. Here are my questions. Here's what I decided to do. That's a great example of something to keep, and reminder to self, you know, check in on these other expenses that I didn't claim, but I might be leaving some money on the table. That's the kind of thing you want to keep in your journal. Okay, and our resources and number are there. I'm going to ask Corinne to join us again, and we typically go over a little bit on these webinars. So if you're just joining us for the first time ever, you may not know that. We're done with the main content. But what we try to do now is answer a few specific questions. Corinne, I might start with you because Rachel and I have been presenting, and so I haven't been reading questions as they've been coming in, but you may have some ones to put out there.
Yes, so lots of CEWS questions coming in, so I'll probably start there and then we go over to CEWS for a little bit. I have a couple of CEWS as well, but Dwayne, I was about to answer Dwayne's question, but I'll do it this way instead. Dwayne was saying, I'm being told that I cannot apply for the further 20,000 as I received the 40,000 from a previous bank that I'm no longer with because the original 40K was borrowed with them. Is that true? So I actually have a few variations of this question in the list already. And Dwayne, you cannot, so basically you have to go back to the bank that you got your original SBA loan from. So that's the rule. So even if you've changed banks, the bank at which you got your SBA loan is the bank at which you need to apply for your expansion loan. So that they are actually obligated as the bank, the previous bank, to provide you with that expansion loan. This has been validated to us by the Government of Canada. They've said that this is how it works. They've made it very clear to the banks that even if the client has changed banks, because we know some have opted to change banks, others have been what we call demarketed, where the bank has basically kicked them out. So in those situations, you have to go back to the original bank that you did your original SBA loan with, apply there, and they should honor it, and it should go through and not be a problem. You don't have to be their client anymore in order for them to provide you with that extra $20,000. So I hope that clears things up a little bit, because that came up in a few different scenarios among the questions that I just received. Do you want to say something?
Yeah, I might just add, the situation might be a little bit different if you're taking over a business and they have a SBA loan. And that will depend on the way that your agreement of the sale turned out, as to whether you can get a new SBA loan or not, or if you're a brand new business with no CRA business number, then maybe you're not eligible if you don't receive that loan, if it doesn't carry over. But yeah, there's something to be aware of. Yeah, for sure. Lori is asking, she says, our year end is November 30th, and somewhere I heard that it only covered businesses with year end of December 31st. This is in regards to SBA. Is this true at all? I don't believe that's true, Lori. I believe that the SBA does not have any criteria, as far as I'm aware of, that you have to have a year end at a certain point of the year. Oh, I think they're talking about the year end of their tax remittances. Essentially, if she's saying her year end is November 30th of 2019, that'll be fine. It has to be in 2019, essentially. So there is that deadline of the December 31st. Right. She's not saying whether it's a new business or not, though. Exactly. Yeah. So yes, so if you're a brand new business that basically only had its first year end November 30th of this year, then yes, that would be difficult for you to access, and that's what we're working on to fix for a lot of those newer businesses. But if it's just that your year end is November 30th, it shouldn't make a difference whether to apply or not to apply. I have some good news to share based on what I'm seeing. About 5 of our members on this webinar have received their CEWS payments. So that's really exciting. And I feel like
It's
I
always nice to know that the pipeline is actually working and the money's flowing. That's
Yeah, that is good to hear. I have had one who said on the CEBA side, someone was saying they had yet to get their CEBA loan. So if anybody has, let me know. But it was only open last Friday, and it does take between 3 and 8 business days for it to get processed. So it may not quite be there yet. And we do know that they had over 100,000 applications on the first day. So it can take time for that volume to be processed. So it may take a little bit longer than normal. So I would suggest anybody who may still be waiting or wondering where your CEBA loans are, you may want to wait just until next week. But if you're still worried, just call the CEBA call center and they can let you know. Also on Monday, the self-service option opens. You can maybe even go online and check it yourself. So just wanted to also mention that.
Rachel, here's one from Enrique. He has to have commercial liability insurance. It's mandated in the lease, but not paid to the landlord, but to the insurance company. Is that basically, I think Enrique's question, is that covered in CEWS? And this is exactly the kind of question that we're still trying to drill down and get clarity. But our best thinking on this at the moment is that would not be included.
Correct. It's actually in our table there as well. The liability insurance is not eligible for the CEWS.
Yeah, so Enrique, that would be one that, so there are some things like that are mentioned in the lease, like you have to have this kind of insurance, but you're not making the payment to the landlord. And we think that's the kind of the dividing line on these expenses, but there are some ones that we're still trying to clarify, but hopefully that helps you, Enrique.
Yeah, I see one question in here about strata fees or condo fees, and that's one that we're not entirely sure on yet. If for example, the renter pays a board these fees instead of the landlord directly. So that's something that you guys should know that we're still working on and waiting for an answer from CRA as well.
But Deborah has, I think, a simpler version of this question, which is property maintenance paid to the landlord covered? And in that case, we think that it probably is covered because it's one of those payments that you have to make to the landlord that's clearly tied to something to do with the property. So Deborah, our best thinking on that, and again, we're really trying to clarify these things and make sure we have it right. So, but we're reasonably confident our best answer on that is yes, that would be included because it's a payment to the landlord directly related to property issues. Rachel, I'm looking to you because we're all, and Corinne, you too, you've been on these calls with CRA, but we're all rowing in the same direction trying to get clarity.
Yeah.
Okay, you seem to be agreeing with me, Rachel.
Oh, yes, of course, yes. Sorry, I was nodding my head in agreement, yes.
Because if we're on the same page, then that greatly increases the odds that we're giving a good answer, even though we're still working to get this type of question, get a straight, clear, plain language answer from CRA on it.
Yeah, it's not easy, but we're definitely trying.
So I may jump in and just also a couple quick things. Chris wanted me to remind folks that the non-deferrable expense stream for the CEBA loans, applicants have to have less than $20,000 in payroll or no income whatsoever for 2019 in order to access that. That's what he's right. So anybody who's not within that 20,000 to 1.5 million, and more likely those under 20,000 are the ones that likely have to use the non-deferrable expense stream. But related to that on the top end, I'm getting quite a few questions around the 1.5 million top end. And a few people are saying they're just over it and so they can't access it. Beth is asking, will they be expanding the maximum ceiling on the 2019 payroll? At this point, they're not. The response government tells us when we've tried to push for this increase has been that that those folks, this is what I suggested to a few folks in the questions, should be applying for the Regional Relief and Recovery Fund. They also have a CEBA-like program. I know that a number of those firms that are just over that threshold have applied through those programs and been successful, and they do have a forgivable portion to them as well. So if you've not been able to access CEBA, you may want to consider going to the Regional Development Agency. There's a list of them in the appendix attached to this webinar, and go to the one that's in your region and see if that's an option for you. They also may provide bigger loans, some of them, but also may provide smaller depending on what it is you need. But they do have the CEBA-like type loans also available, as well as the top-up. They are going to be providing the top-up as well for those that are eligible for the regular $40,000. So I just wanted to bring that up because that was coming up quite a bit as well.
Yeah, I would probably just add to that. I don't know if you mentioned the BCAP programs, but they are intended, many of the BCAP programs, and there's maybe 5 different loan programs in that. So
BCAP is the Business Credit Availability Programs, yes.
Yes, yeah, and it gets a little bit confusing because CEBA is technically one of those programs, but the other 4 or 5 loan programs in that, and I realize I'm saying programs a lot, but they're intended for people with a bigger payroll, so something over 1.5. Yeah.
Right, except that there's a new one coming that's going to be for the highly affected sectors, which I talked about earlier, and that's going to be part of this group of credit availability programs. And those loans will be smaller, up to 1 million, and they will be at a more favorable interest rate. But the key thing to remember is that all of these loans are either partially or fully guaranteed by government, but they all have interest on them. So unlike the CEBA loan, which is interest-free and a forgivable portion, these are others are more like term loans that you would normally go to a bank for if you had, but are there to sort of hopefully provide some other source of financing for businesses that need them.
Yeah, and often these have personal guarantees as well. So
yes,
just bear in mind you're taking on liability.
Mm-hmm. All right.
So
go ahead, Laura.
Oh, no, I kind of wanted to include Ryan's comment. It's on those closures, business closures. And it's kind of a funny one. As you compare retail, it would be great to also pressure all levels of governments to limit the operational ability of Amazon, meaning they can only have 15% of capacity here in Alberta, as an example. So perhaps Amazon then would not continue to have the online advantage. And while of course that's likely not something we can do, I think it is exactly the reason why this unfairness is so problematic, and we are looking at how to make sure that businesses have access to good tools to get online and how to deal with that unfairness that is existing in the market right now, and also encourage consumers to shop local.
Yeah, and I was just going to say, I've heard from other members, not in the webinar today, but just in the last couple of days about that very issue as well. And it should be noted that the government in the federal economic statement did say that they are going to introduce tax measures on international online retailers. So they are going to start requiring that GST, for example, be charged to Canadian customers when they order something through an online retailer or through online services or through a fulfillment center is often how companies like Amazon and Wayfair operate. And so there should be sales taxes now applied to those, which isn't great for you as a consumer, but at least it's a bit more of a level playing field as a business owner. And secondly, they are also going ahead, and that's going to be as of July of next year. And then secondly, as of, I believe it's either January or July of 2022, they are also going to be introducing a new tax on international online companies. It's part of a global effort among countries to be a bit more focused on, these large companies that don't tend to pay many taxes. So that is coming too. And again, all of this is in a bit of an effort to level the playing field between these online folks and the folks that are bricks and mortar. And we as an organization, we normally don't endorse new taxes or taxation, welcome these measures because we see the inherent unfairness that's out there for many of our members who are struggling to compete with these guys.
Great. Well, we're kind of running out of we've gone over our time and we're running out of runway. So I think I'll go to you, Corinne, and then you, Rachel, to see if there are any other questions that you want to make sure we get to today. And then, of course, we'll be back next week with our Christmas special webinar, right, guys? That's gonna be, we'll have to decorate the slides with Rudolph's or something. But yeah, so we'll be back next week with our last webinar of the year. And but anything, Corinne or Rachel, that you want to? I'll go to you, Corinne, first. Any last questions, and then we'll go for the wrap-up comments.
Yeah, I did have a number of questions on wage subsidy, which we actually didn't get to today. So probably next week, we'll do a bit more focus on the wage subsidy because we know changes are coming for the January. We'll just be getting into the January, and I have had a lot of questions around what are going to be the comparison months for the January portion versus, because right now you compare it to the same month last year or to January, February. And if we're now in January, is it still going to be the same or is it going to change? So we don't have those answers yet. So we're going to endeavor to get those answers this week and provide you with more up-to-date information around how the new wage subsidy is going to work in that regard. And also just to clarify, I've had some questions around the 75%. And what is that going to look like under the new wage subsidy? It isn't going to change much unless you have more than a 50% revenue loss. Up to a 50% revenue loss, the formula is going to remain the same for you under the wage subsidy, even in the new form. If it's over 50%, that's where you might see a bigger bump in the amount of wage subsidy that you may get. And you have to have a 70% revenue loss in order to get the 75% wage subsidy. So that's just in a very big nutshell how that's going to work, but maybe we'll try and go through that again in more detail next week so that people understand as we go into that phase of the wage subsidy.
Great. Rachel, any additional questions you want to put out there before I come back to you for wrap-up comments?
Yeah, I'm seeing a lot of questions about the non-deferrable expense stream for the CEBA and what can be included or what can't. And this has been really problematic, but I guess I kind of just wanted to mention that one of the things that I'm hearing businesses feel really blindsided by is that their independent contractor expenses have to be from January 1st to the end of March, or to the beginning of March, sorry. And those are things that they have to be able to upload as well as documented proof that it was incurred during those periods for the year of 2020. And that sounds really convoluted, and I'm aware, and is something that Corinne and Laura have definitely been pushing on their end. But yeah, that's mainly what I wanted to address there.
Great. And so let me go to you, Rachel, first for your wrap-up comments, and then I'll go to Corinne, and then we'll call it webinar, what are we, 35, webinar 35, we'll bring it to a close. So Rachel, over to you first.
Yeah, and again, it's going to be this idea of self-care. Make sure you're taking care of yourselves. Make sure you don't feel alone at this time, and that you're reaching out to all of your experts, all of your help and your community, because sometimes it's just a matter of sharing the information that you know with those that are in the same boat as you are. And there's a lot of businesses that are in the same troublesome boat right now. And so that would be one of my 3 tips. And the second one is to think big and shop local at this time. And that's something that you'll see in our social media. We're constantly pushing. And my last thing I wanted to bring out was just a shout out to our member Jennifer for reminding us to be kind at this time of year and to really help others during this time, like donating to your local food bank, for example. And so, yeah, that's it for me.
Thanks, Rachel. Corinne?
Yeah, so it's hard to believe we are in the middle of December, and we've been going on for 9 months. And I am just constantly amazed and inspired by the many small business owners who continue to move forward and try to do the best that they can to deal with what is a pretty crazy and unusual and stressful situation. So I want you to know how much, not just me, but I know the entire CFIB team is like constantly inspired by what's happening and why it continues to drive us in the work that we do. We do have 1 more to go before Christmas. I think that we're already sort of letting you guys know that we're probably going to take a small break over the Christmas holidays, but we will be here again next week. And, you know, again, I wish I could get to every question. I'm frantically trying to go through as many as I can. But please know that we do read them all, and we do use them in our work day to day, and we'll continue to raise your issues as they come along and your ideas. I got some really good ideas in here as well, so thank you for those. And with that, hopefully we'll see you next week.
Thanks, Corinne. And I'll just come in behind both you and Rachel as we wrap up. I think, Corinne, your theme of you members inspire us and also help us with our work is a really good theme. And I can't emphasize that enough, how important these webinars have been to all of us who are working on these issues on your behalf, our surveys as well, and our helpline data, but we feel very, very connected to you and your issues, and it's been very, very, very helpful to our advocacy work. And you are our heroes. That's, you know, that's why we do what we do. We are always championing your cause and inspired by you. The second thing I want to say is just to come in behind Rachel and say again, I think that it's just so important to look after yourself, and I like that mantra of be kind. I would add be patient. It's, you know, this is a trying time of year. That song, it's the most wonderful time of the year. Every time I hear it, I think it's the most challenging time of the year after a very hard year. So be patient with yourself. Be patient with others, and don't forget to breathe, because that helps with kindness and patience. So we look forward to seeing you all next week, or as many of you as can make it, and we will make that our Christmas special. We'll answer as many questions as we can, and we do plan to carry these on in the new year for as long as people are needing us to be here in this way. So with that, I will wish everyone a nice weekend, and we will see you soon, and stay connected. Please stay connected to us in one way or another. And with that, Alexa, we will end the 35th COVID webinar. Thanks, everyone.